Welcome back. As we kick off the new year, perhaps some of your resolutions involve your finances.
Today's Smart Money expert will help you get things started on a high note. We're joined by Associate Professor of Finance at John A. Logan College and the founder of the website, thetraderseye.com, David England. He is here to talk more. And David, let's just start things off with your predictions for 2011. What are you seeing out there?
It's going to be a volatile year. I am bullish going into the year 2011. I am taking a look at possible pullback sometime between Valentine's Day. Now on Valentine's Day, one of the biggest reasons, anytime you have a large run-up like we had at the end of the year, there's going to be some profit taking. A couple other things to look at to kind of be on the warning signals will be the Chinese economy. It's becoming very, very overheated, and the Shanghai index looks like it's about to break support. That means go down. That could take ours down also. And then the continued debt crisis in Europe. Some people say, why that? Well, a large number of our banks have a large percentage of debt over there. So those are three concerns that we need to take a look at. But I am overall bullish.
What would you say is one of the big financial challenges of 2011?
Well, this is going to be huge. Financial reform as far as pensions go.
Okay.
Pensions is going to be front and center because so much of the budget for municipalities and these types of things are going to be to the pensions obligations that are made. So that's going to be in 2011, 2012, 2013.
And we saw a lot of bailouts over the last few years with the auto industry and different businesses. And now you think, excuse me, some cities may be requesting financial bailouts as well.
I'll make a prediction that 2011 will be the first year that we have a large major city possibly not go bankrupt, because municipalities sometimes can't go bankrupt, but they can be deemed insolvent. So we'll probably have at least one of those. I hope that we don't. But you know, we have decades of bad decisions, greed, and corruption that's landing right on our heads. The last couple of years, we're really going to see this in the next couple of years.
And not just in terms of cities, but also states as well, right?
Probably, and this is tough to say, okay, but probably in the year 2012, maybe the end of this year, probably the beginning of next year, we'll probably see one of the first states go down.
Wow. And
that would possibly be either California, New York, New Jersey, or unfortunately our beloved state of Illinois. But we do have time to turn that around. Remember, I'm a positive person.
Sure.
And in my classes and seminars, I teach everything that's negative. There are many, many, many opportunities. So it's not too late, but we're going to see one or two ask for a federal bailout. It's inevitable.
Wow.
Very interesting. And also, David, we take questions on our Cover It Live chat. I think we have one this morning about gold. Do we have that one up this morning? Randall wants to know, if you're holding on to gold, when would be a good time to sell it, and is it one of the items that will keep going up?
Well, I'd sell it right before it goes down. Now, in all seriousness, whenever you're dealing with gold, gold is really not something to be traded unless you're doing the futures. And I'd take a look at a bull-call spread after a good pullback, or if you're trading the ETFs like GLD or some of the other gold companies. But whenever you take a look at gold, that's something that's so hard to predict. What I tell my students is that it's pretty good to take a look at possibly 10 to 15% of your portfolio in gold or silver. Gold gets all the attention, but silver is the one that's ran up remarkably this year. But it wouldn't hurt to have some of that in physical. But the physical is generational. You don't buy the coins or these types of things to sell next week. But you know, as far as predicting gold, I'll leave that to the experts, which I really don't even trust their opinion because it's so volatile. But I can say this, as long as we continue to have our deficit spending, and I don't see that changing anytime soon. I do see it being challenged this year, especially with what's going on in Washington, D.C., and I hope in Springfield. But as long as we have our obscene deficit spending, then gold is still going to look very, very attractive.
And David, we don't have a whole lot of time left, but we want to get to our last question here. This is from Janie. It pertains to short-term investments. What's a good short-term investment that you could get your hands on if need be? CD rates seem to be so low.
Oh, that's simple. The symbol is CASH, cash, and wait for a good, healthy pullback. We're probably going to get two in this next year.
Wow. David England, thank you so much for your insight today. We appreciate having you
Thanks for
as
having
a
me.
smart money expert. And we do have another smart money segment coming up as well. John Forbes from the Forbes Financial Group in Carbondale joins us for our next segment. And John will be here to answer your questions next Monday. Feel free to email us at news3am@wsiltv.com. You can contact us through Facebook or use your smartphone to send us an email.